It's 23:30 on January 27th, 2026. The US Mint's online ordering system went dark 6 hours ago, and what I'm seeing in the procurement bulletins should terrify anyone who thinks the silver shortage is just a paper market phenomenon. While retail investors spent this weekend debating futures positioning and institutional manipulation theories, the physical silver market just hit a brick wall that's about to cascade through every major mint operation in the Western world. I'm a private commodities analyst who's been tracking precious metal supply chains for 14 years. I built this channel because I got tired of waiting for mainstream outlets to explain the real mechanics behind market disruptions. And tonight, I need to walk you through something that's been building quietly in the manufacturing infrastructure that produces physical silver coins. Something that's about to make the paper versus physical debate academic, because there won't be any new physical silver coins available for retail purchase. Here's my primary thesis, and I'm going to prove it with supply chain data that most precious metals dealers have never seen. The US Mint has suspended all American Silver Eagle sales, not because they lack silver bullion, but because they can't secure the specialized silver planchets required for coin production. And this planchet crisis is about to cascade through the Royal Canadian Mint, the Royal Mint in London and Perth Mint in Australia, creating a global shortage of retail silver products that will force premiums to levels we've never witnessed. The suspension announcement came at 5:47 p.m. Eastern Standard Time on Friday, buried in a routine procurement update that most people ignored. The US Mint stated they were temporarily suspending American Silver Eagle sales due to supply chain constraints affecting production materials. They didn't specify what materials or how long the suspension would last. But I've been tracking the specialized silver planchet market for months, and I can tell you exactly what's happening. A planchet is the blank metal disc that gets stamped into a finished coin. It's not just a round piece of silver. Planchets require precise thickness tolerances, specific edge treatments, and metallurgical properties that allow clean striking under high pressure. American Silver Eagles use planchets with specifications so tight that only 3 companies globally can manufacture them to US Mint standards. Those 3 companies are Sunshine Minting in Idaho, Osborne Coinage in Ohio, and Pungsan Corporation in South Korea. Between them, they supply planchets not just to the US Mint, but to virtually every major government mint operation in the Western world. And here's the crisis. Industrial silver demand has exploded to levels where these manufacturers are prioritizing higher margin industrial contracts over government mint orders. Let me break down the economics that created this bottleneck. Under normal market conditions, government mint contracts provided stable, predictable revenue for planchet manufacturers. But industrial silver demand has changed those economics completely. Solar panel manufacturers are now paying 15-20% premiums over spot silver prices for high-purity silver pastes. Electric vehicle companies are offering long-term contracts at premium pricing for silver components. Medical device manufacturers are competing for silver compounds used in antimicrobial applications. Sunshine Minting has restructured their entire production schedule to prioritize industrial customers. Their government mint allocation has dropped from 70% of capacity to less than 35% since October 2025. Osborne Coinage is experiencing similar demand pressure, with industrial orders now representing 60% of their production versus 25% just 2 years ago. The South Korean component adds geopolitical complexity. Pungsan Corporation has been under pressure from the Korean government to prioritize domestic industrial needs as Samsung and LG ramp up silver-intensive manufacturing programs. Their export capacity for specialized planchets has been reduced by 40% since the beginning of 2026. This creates a perfect storm for government mints. They're competing for manufacturing capacity against industrial users who can pay higher prices, offer longer-term contracts, and provide more predictable demand patterns. The mint orders are seasonal and politically sensitive, while industrial orders represent steady, multi-year revenue streams. But the US Mint suspension is just the beginning. The same planchet shortage that's affecting American Silver Eagles is about to hit every other major government mint operation. The Royal Canadian Mint uses the same suppliers for their silver maple leaf production. The Royal Mint in London sources planchets from Osborne Coinage for Britannia coins. Perth Mint has relied heavily on Pungsan Corporation for their silver coin programs. Here's where the Brexit complications make everything worse. The Royal Mint's supply agreements with Osborne Coinage have become significantly more complex due to post-Brexit trade arrangements. More critically, the expanded EU sanctions on Russian silver have eliminated alternative supply sources that European mints previously used during capacity constraints. The timing couldn't be worse for physical silver demand. Retail investors are already competing for limited inventory as institutional buying pressure increases. Coin dealers are reporting the strongest physical demand they've seen since 2011, with many products selling out within hours of restocking. Let me show you the premium explosion that's already beginning. 2 weeks ago, American Silver Eagles were trading at $4.50 premiums over spot prices at major dealers. As of Friday's close, those same dealers were quoting $7.20 premiums for remaining inventory, with many showing temporarily out-of-stock status. Canadian silver maples have increased from $3.80 to $6.95 premiums over the same period. But this is just the beginning. If the planchet crisis extends into February and March, as my sources suggest it will, we're looking at premium levels that will make current pricing seem reasonable. When retail production stops but demand continues increasing, the mathematics become brutal for anyone trying to acquire physical silver. The industrial demand driving this crisis isn't temporary or cyclical. Solar panel installation schedules for 2026 are locked in place. Electric vehicle production ramp-ups are contractually committed. Medical device companies have FDA approval timelines that can't be adjusted for silver supply considerations. This creates what supply chain analysts call demand inelasticity. Industrial users can't reduce their silver consumption without shutting down entire production lines. They'll pay whatever prices are necessary to secure silver supplies. Government mints, by contrast, operate under political constraints that limit their pricing flexibility. They're institutionally prevented from competing effectively against private industrial buyers. Let me address the obvious skeptic arguments. The strongest objection is production flexibility. Bears argue that planchet manufacturers can increase capacity quickly by running additional shifts or bringing idle equipment online. Here's why that analysis underestimates the complexity of specialized manufacturing. The equipment required for precision planchet production can't be operated continuously without maintenance windows. The metallurgical expertise required isn't easily scalable through additional shifts. More importantly, the manufacturers have made strategic business decisions to prioritize industrial contracts because they offer better long-term financial returns. The second skeptic argument focuses on substitution possibilities. This ignores the regulatory requirements that govern government coin production. American Silver Eagles must meet specific legal tender requirements defined in federal legislation. The U.S. Mint can't simply change planchet suppliers without extensive testing and regulatory approval. Here's my personal framework for monitoring how this crisis develops. I'm tracking 3 specific indicators that will reveal whether we're looking at a temporary disruption or fundamental restructuring of retail silver markets. First, dealer inventory levels across major product categories. If Canadian maples, British Britannias, and Australian coins all start showing inventory shortages simultaneously, it validates the cascading planchet crisis thesis. Second, premium progression patterns in secondary markets. If premiums continue expanding even as spot silver prices remain stable, it demonstrates that physical demand is decoupling from paper market pricing. Third, industrial silver pricing behavior. If industrial demand is driving this crisis, we should see spot silver prices remaining strong even during paper market weakness. My trigger for escalating concern is straightforward. If 3 or more major government mints announce production suspensions within a 4-week period, we're looking at systemic failure in retail silver supply chains. Here's what I'm doing with this information in my own positioning. I'm avoiding any strategy that depends on acquiring new physical silver products over the next 6 months. Instead, I'm focusing on existing inventory and alternative exposure mechanisms, secondary market silver products that don't depend on new production, mining company equity positions that benefit from higher silver prices regardless of retail product availability. This isn't about predicting short-term price movements. This is about recognizing that the physical silver market is undergoing a structural transformation where industrial demand is systematically displacing retail access to new production. The planchet crisis reveals how fragile the retail precious metals ecosystem actually is. The entire Western world's coin production depends on 3 manufacturing companies, all of which are now prioritizing industrial contracts over government mint orders. When those manufacturers shift their allocation priorities, retail investors lose access to new physical silver, regardless of their willingness to pay higher prices. What concerns me most about this situation is how little visibility retail investors have into the manufacturing supply chains that determine product availability. The planchet crisis has been building for months, But most precious metals dealers weren't aware of the severity until production suspensions started hitting their inventory replenishment cycles. The US Mint suspension isn't an isolated event. It's the visible symptom of a fundamental shift in how specialized silver manufacturing capacity is being allocated. Industrial demand has reached levels where government mint orders represent opportunity costs rather than profit centers for manufacturers. March 2026 will be the critical month for determining whether this crisis extends globally. The Royal Canadian Mint typically announces their production schedules for the second quarter during early March. If they reduce silver maple leaf production estimates, it confirms that the planchet shortage is affecting multiple mint operations simultaneously. We are looking at the potential for a multi-month period where retail investors simply cannot acquire new government-minted silver products at any price. The production capacity has been reallocated to industrial uses, and manufacturing lead times make rapid capacity expansion impossible. This represents a fundamental shift in precious metals markets. For decades, retail investors could assume that government mints would continue producing silver coins as long as demand existed. But industrial silver demand has reached levels where retail production becomes economically unviable for manufacturers. The screen shows you silver spot prices trading in normal ranges with typical volatility patterns. But underneath that surface stability, the retail silver supply chain is experiencing systematic capacity allocation away from individual investors and toward industrial users. Stay sharp, monitor dealer inventory levels, and remember that supply chain disruptions often manifest as availability problems before they show up as price problems. The great planchet crisis is happening now while most people are focused on paper market dynamics. The US Mint suspension is just the first domino. London is next, followed by Canada and Australia. When government mint production stops globally, existing inventory becomes the only game in town. And there isn't nearly enough existing inventory to satisfy current demand levels.